If you are a private practice owner and you've watched a ton of business videos like this, you've read a bunch of posts online, and you still feel like your finances in your practice are a mystery, this episode's going to be for you. Talking about your metrics does nothing. It never made anybody any money. The only thing that actually changes your business is measuring the right things and then taking action on them. And so this is going to be the final episode of this series, and it's probably the most important one, because at this point, you've heard me walk through all the key stats. You've heard me walk through the arrival rates, the units per visit, the denial rates, the AR average reimbursement per visit, the payroll percentages, all the things. But none of that matters if you don't have a simple way to track those numbers and a simple way to decide what to do next in your business. And so most owners are stuck in one of two traps. Either they're not measuring anything consistently and just going off of emotion, huge red flag, or they're learning about their KPIs, but they're not actually using them to drive the actions and decisions in their business. Ladies and gentlemen, welcome to the final episode of the Private Practice Scorecard series, episode 12. The name of the episode: the 2 tools that keep your clinic profitable without guessing. Guys, this is it. This is the grand finale. Today I'm going to walk away. I'm going to go through the 2 tools that I've used to run my clinics. Also the ones that I've given to our coaching clients when we had our coaching program. Very simple, easy to follow tools that can help you make smart decisions in your practice. All right. And that's really what I want to try to help you with, is to get off of the emotional roller coaster of your business, get into the objective roller coaster of the business, so that you can make key objective decisions and have more stability in your practice, because you deserve that. All right. And so here's the problem. The problem is the same one that we've been talking about for weeks. It's that we all know that we should be measuring our metrics. We talk about it all the time, but very few owners actually do. Very few owners actually measure the metrics consistently, actually report on them, and more importantly, the most important, change their behavior based on what the metric says. That is something that I still struggle with, right? A lot of us want to make emotional-based decisions for whatever reason. It's easy, it's convenient. We don't have to do any tedious, boring work. But changing your behavior based on the data, now, that is something that you have to learn how to model as the owner, and not until then will your team start modeling that behavior with you. All right. And so if you watch this entire series, you're watching months worth of business videos, and you kind of just nod along and you say, yeah, that's a good idea. And then you go back to business as usual and you don't do anything different, nothing in your practice is going to change. Because the only thing that is going to help you make financial progress in your business is objective clarity, objective change. It's math, right? The dollars have to just add up in your account. And emotions are not objective, right? They're definitely not objective indicators of business health. How many times, there have been many times where I've woke up in a bad mood for whatever reason because the weather is bad. It doesn't mean the business is bad. Or sometimes I've woken up in a great mood and doesn't mean the business is great, right? Pearson's Law, if you check out, if you want to read anything about this phenomenon, there's a law, a principle called Pearson's Law. And it's something to the effect of, when performance is measured, it improves. Period. And when performance is measured and reported on, the rate of the improvement accelerates. So there's 3 steps here. Measure what matters. Report on that regularly. And change your behavior based on the reports. All right. Because you can't manage what you don't measure. And if you're not measuring, you're running your clinic on vibes and emotions. And that's an expensive habit. I've tried it. It doesn't really work. Okay. So let's talk about the two tools. One tool is going to, they're not necessarily in order of importance. Well, I don't know. I'm going to tell you the tools that, I'm going to show you the two tools that I've used and how I was able to roll them out in my practice, how we typically recommend rolling them out. All right. One is going to be the KPI dashboard, which is going to be the rear. So think about driving a car. Okay. In a car, you've got the windshield, right? The windshield is like the big piece of glass, right? The big window in your vehicle. And then you have the rearview mirror, which is kind of up there, right? It's a lot smaller. So the reason why, and by the way, I'm explaining this the way that it was explained to me during one of our conference last year by a gentleman named Blaine Stymack, who owns like 40 something clinics. He's like incredible business owner. He did a really great talk on finance, and this is the way he explained it. And I was like, that makes a lot of sense. So there's a reason why the forward windshield is so big. It's because it's the one that you need to spend most of your time on, right? The rearview mirror is not as big for a reason, right? You can see behind you, and it's important to be aware of it. There's some really important reasons to know that, but it's not the most critical. The most critical is actually knowing where you're going. All right. And so the first tool that we're gonna talk about is the KPI dashboard. All right. KPI dashboard. All right. This is gonna be the rear view mirror. All right. KPI stands for Key Performance Indicator, aka statistics. All right. Very simple. This is a simple one-page snapshot of the past, of what happened or what's in the rearview mirror. Okay. Here's what we actually did. Right? So measures the past. Another way of other terminology used is trailing indicators. Okay, so these statistics are trailing your performance. They're in the past, and they give you some indication as to how you're performing as a company or as a team or as whatever initiative that you have. Okay. So that is what this is. It's a rear view facing statistic or KPI grid. Okay. And so the purpose of it is to evaluate performance. Okay. The purpose of the dashboard is to evaluate performance of what happened, what already happened. Okay. Or are we hitting the targets? Are we hitting the targets that we agreed upon? Or are we hitting the targets that we said we wanted to hit? Or are we off? Basically, right? And so the typical cadence of measurement is going to be weekly and monthly. As a general rule of thumb, it's easier to measure things in longer timelines. So monthly is easier to measure than weekly, is easier to measure than daily. More frequency of measurement, it's administratively burdensome. It requires a little bit of some systems, etc. All right, so today we're going to talk about monthly cadence. All right, and so some of the core categories that you can measure are going to be everything that we've talked about in all of these videos. Now the KPI dashboard I'm going to give you today isn't going to cover all of these things. It's going to cover the essentials, but you can cover things like demand and patient behavior, right? I'm going to write these down for you. So what are some of the core categories? Demand or marketing statistics, right? New leads, internal leads versus external leads, lead conversion percentages, new patient arrival rate percentages, overall arrival rate percentages, average visits per eval, average prescribed frequency per week, all those statistics. All right. You can measure provider performance. All right. Skilled units per visit, productivity, utilization. All right. You can look at money and billing. Okay. Look at your average reimbursement per visit, over-the-counter collection percentages, your denial rates, percent collected versus projected, your AR over 90 days. You guys remember all that stuff. If all of that sounds new to you, go back a few episodes. I cover all of those things in detail. All right. And then you can also look at things like your global finances. All right. Gross income, gross expense, net profit, profit margin percentages. And then you can break down your payroll percentages, your marketing percentages, your operations, your billing, your supplies as a percentage of income. Okay. And so you're looking in the rearview mirror of your business every month. You're looking at these statistics and what you're being shown is how well your people and your systems are performing last week or last month against the actual plan that you had in place. All right. So that's the KPI dashboard. So hopefully that nails that for you. Okay. Tool number 2. This is the one that I didn't learn how to use until a little bit later in my journey. And this is the one that opened up a lot of things for me in my business. And also it's the one tool that, quite frankly, our coaching clients, when we had our coaching program at PPO Club, it's the tool that they loved. It's the tool that really unlocked a lot of clarity around their finances. All right. And so that tool is going to be the Pro Forma or the Windshield. Okay. Blaine Steinmack during his talk said 80% of your financial decisions should come from your pro forma, or should come from the forward-facing statistics in your business. Okay? And that's what this is. It's a forward-facing money model. All right? So this is a forward-facing basically, this is like if you were going to develop like a business plan, a financial business plan, like this is what you're projecting the financial performance of the business, right? So you're going to have some data to know how to make this work. But that is what this is for, okay? And so what is the purpose of it? The purpose of it is to design. You're designing, you're being the architect of the business. So you can design things like productivity. You can design revenue per visit. Okay. You can design your team size. You can design your profit margin. You can design these things. You can design them in advance on paper before you commit your resources, before you commit your time, your money, your people towards an initiative. You can design it first. You have a plan. You have a playbook. All right. As mentioned, 80% of your financial decisions come from the pro forma. It's going to answer questions like, how many visits does each full-time equivalent in my practice need to complete? What are my productivity expectations? At what average revenue per visit does that need to work? With what payroll percentage? With what marketing percentage? How much money can I spend on recruiting? Right? So that you can pay your people well, treat your patients well, and still make 20% plus profit margins in the practice. All right? So that's the whole goal. All right? And so what's the relationship like? Okay, how do these two tools work? And I'm going to give you the tools here in a second. All right. So the pro forma, as mentioned, is the target. Okay. It's the target. All right. The dashboard is the score. All right. Or it's how close did you get to the target? Are we actually running the model that we said we would? And if you're not, do we need a better system? Do we need to improve the system? Do we need to add staff? Do we need to change our staff? Do we need to adjust the model? Right? And so we're creating the pro forma, and then I don't like to use the word force and constraint because it sounds so violent, but in some ways it needs to be. We're constraining our decisions and our behaviors so that we can conforming our decisions and behaviors in alignment with the pro forma. And that's going to be ultimately what helps you hit the profit margin that you want to hit. All right. So let's talk about, I'm going to show you the two tools that I have. All right, I'm going to walk you through kind of how they work, and I'm going to give them to you for free. All right. So I'll drop a link in the show notes. Go look under KPI Dashboard, and there'll be a free funnel. Meaning you click on it, you got to give me your name and your phone number and your email, and I'm going to give you these two tools for free. I'm going to give you the two KPI dashboard, the KPI dashboard and the pro forma tool absolutely free. You can, and this video will probably linked to the board somewhere, so that way you can watch it as a training. All right, but go download that unless you have something of your own, and you can start using it to make real decisions in your practice. All right. So let's start with the KPI dashboard. All right. Here we are, guys. So this is kind of the dashboard. Very simple. Told you guys it was simple. And here's the pro forma. Okay. So I'm going to kind of walk through this with you guys just to kind of show you kind of how it works. All right. Now, notice that not every single metric that we discussed is on here, because it's important that we just keep it simple. Keep it simple for now. And if we want to expand on it later, feel free to expand on it later. You could totally expand upon it later, and you could add all those metrics that we discussed. But this is usually plenty good enough for us to start. All right. So there's 2 training videos here that you can watch. I'll probably also link this YouTube video here somewhere so that you can come back and watch this video. But when you download this thing, or when I send it over to you, I'm gonna send it over to you via email and or text. You're gonna get this. You're gonna make a copy of it. You're gonna go to File. You're gonna make a copy. Click Make a Copy, and then you're gonna have your own dashboard that you and your team can use. All right. And so I created a little legend for you over here of kind of how these statistics are being measured. And then you can kind of input the data here. All right. So you could see the cells that are kind of this weird looking, like yellowish color. And then you could see the cells that are this weird looking cyan color. This yellow color are going to be ones that are going to require manual input from you. Okay. You're going to manually go in and type in information there. These other ones, they're going to all be automatically populated. All right. So we'll come to January. So this, you can see over here in column A, there's all the months are broken down: January, February, March, April, May, all the way to December. Now, if you want to add more months, you just come here and you can highlight this over here. You got to learn how to use Excel a little bit. And then you could add more months, right? But let's say column number 1 is going to be the number of new patients that we completed in the month of January. Actually, let's say it's August. So it's August 10th. All right. Okay. So we're going to measure July. So July has been completed. July is done. We're now in the first week, going into the second week of August. So we're going to look back on July. Remember, the KPI dashboard is a look back, the rearview mirror. All right. We're going to go into our EMR. How many new patients did we complete in July? Let's say we completed 40. We're going to go in. We're going to type the number 40. Right? How many total visits did we complete in July? Well, let's say we did 500. What was our arrival rate percentage? All right. And here's the formula down here: the number of completed visits divided by the number of scheduled visits. Okay. Let's say we had a good month. 92%. How many units per visit did we bill? 3.9. All right. What was our AR over 90 days? We're going to go to our billing reports, and we're going to see, let's say we have 25%. How much gross income did we pull in? We're going to go to our bank, type in, let's say we did $65,000. What was our gross expense for the month? Let's say we did $52,000. There we go. All right. And you could see what's going to happen here. Let me fix this up for you guys. Pause, Rika. All right, let's resume. So you're going to see what's going to happen here is you're going to start getting some metrics over here to the right that are going to automatically populate for you. that are going to help you start to make some key decisions in your business. All right. Now, some of these metrics don't, you could see here that I had to go ahead and add June's data in here, because some of these metrics, like visits per eval and some of the break-even metrics, they rely on the previous month's data to create an accurate measurement. So I had to go ahead and populate some things in here for you. So what we're seeing here is average visits per eval, we're sitting at around 12.5. Our goal is to be at 14. So why is that happening? Well, since our arrival rate is pretty good, what this means is we're just discharging people early. We're either discharging people early or they're just dropping off the schedule, right? So if we could get this number up to 14 or 15, that brings this number up to, let's say somewhere around there, right? So it's a lot different. We go from 500 to 550 or 600 visits a month. All right. And so that's going to drive our volume up, which is going to ultimately drive our income up. All right. We're seeing here our AR over 90 days is at 25%. That means our revenue cycle is a little messed up. So we got to look at what are our denial rates, right? What's our collected versus projected month over month? We can start diving into that. But if that's 5% of revenue that's sitting out there that probably needs to come back in the clinic somehow. We have our average reimbursement per visit being measured. We have our profit margin's good. And then we're going to start measuring out our break even. Our break even is how many visits per month do we need to complete in order to make a 10% margin, a 20% margin? How many evals a month do we need to complete in order to make a 10% margin and a 20% margin? We didn't talk about break even too much during the KPI dashboard, but that gives you a break even target. All right. And so, probably the last column Q probably needs to be like your decision-making column. So like, what decisions are you going to make this month? What are you going to prioritize this month? Based on these metrics, what are you going to prioritize to get your clinic back or to optimize the health of the practice? And what we're seeing here is units per visit is a little low. So I have conversations about the schedule and about provider billing. So we need to have that conversation. We could dive into each provider's metrics and figure out where that is. We need to look at our drop-offs and our discharge rates and see if there's opportunities for us to extend plans of care or recapture some people that are dropping off. And we need to have a conversation with our billing department to see what's going on with our AR. What are our denial rates? Those are the 3 priorities for the business. Right? And so you can go in and you can have some action items and you want to see this number improve. You want to see this number improve. You want to see this number improve. And so the consistency of measuring this month over month over month is going to be the thing that will unlock discipline, right? Like, what you don't want to do is measure this and say like, oh, okay, well, let's go back to work and let's go treat some more patients and we'll see what happens. No, like, let's have some initiative here. Like we see the metrics. Let's make some action. Let's take some action. Let's take some action and like actually like get with our team and make some agreements on how we're going to change our behavior to make a statistical change in the practice. All right. This will transform your practice in a lot of ways. Okay. The pro forma, everyone's favorite. Everyone's favorite. This one is a little bit more dynamic here, right? A little bit more dynamic. But what you'll see here is there's a little legend down here on the bottom left that'll tell you kind of a step-by-step process on how to use this tool. All right. Step one, if you want to put in your average reimbursement per visit, that's going to be right up here in D5. What is your average reimbursement per visit? Well, you could probably go back and look at your pro forma and get a running total of the last 3 months average reimbursement per visit. Put it right here. We're just using an example of $90. Okay. Now you could see right here, this profit margin is at 21%. Let's say if I make this $100, you see that's going to jump up to 28%. That changes. It's going to change things. But we're going to call it $90. All right. Step one, calculate your average reimbursement per visit. Put it in this cell. Step two, input the FTE status in visit breakdown box. All right. Right here. All right. So what we want to do is we're going to go in. Let's pause on step two here. Well, actually what we're going to do is we're going to go in, we're going to list all of our team members here. All right. We're going to put John Doe, Billy Smith, whatever, all your full-time employees that you have with benefits, we're going to put them right here. All of your PRN or part-time employees that don't have benefits, we're going to put them here. We're going to put in their hourly rate. We're going to put in their FTE status, meaning basically how many hours a week are they working, right? 40 hours a week will be 1, 20 hours a week will be 0.5, 30 hours a week will be 0.75, etc. On average, how many hours a week are they working? It's going to total up what their net and gross annual pay is and then give you a total annual payroll cost down here at the bottom. And that's going to come right up here at the top. Then all of your treating clinicians will go here in column B. Basically, all of these people here that are clinicians will go here. And what we want to do is enter their FTE status in the visit breakdown box, meaning what percentage of their time is actually spent treating patients, right? So for instance, if it's 100% of the time, it'll just match this, right? So if, let's say this PT here, let's say they're getting paid $40 an hour, and let's say they're a 1, all right? Okay, so what that means is they're getting paid $83,200 a year, and after their benefits and their paid time off, it's somewhere around $104,000 a year. Well, this PT, we want to say 100% of his time is spent treating patients. So it's gonna match. It's gonna be a 1-to-1 ratio. Now let's say this person's getting paid 40 hours a week, but they're only treating 30. Let's say there's some type of leadership position. We'd put that at 0.75. All right. Number 3. Establish a weekly visit per FTE metric. That's going to be right here. How many total visits a week does each therapist need to complete? Okay, I put 50. For you, it might be 40. For you, it might be 60. Okay, but we need to come up with a minimum amount of completed visits that must be completed in order for this to work. Number 4, put your arrival rate. What is your average arrival rate over the last 3 months? Okay. And what you'll notice here is if my arrival rate is 90%, that means I need to schedule 56. I need to schedule 56 to each FTE so that they land at 50. Let's say my arrival rate's only 85%. That means I have to schedule 59 per FTE for them to land at 50. Okay? So now you have a scheduled utilization metric based on your arrival rate and your minimum productivity standards. Okay? Number 5, input your billing percentage. What percentage are you spending on billing? Put it right here in J7. Step 6, put in all your payrolls. Step 7, input all the expenses related to marketing, operations, and supplies, right? So you can go into your bank statement or get with your bookkeeper and say, put all the marketing expenses there, put all the operations expenses there, and put all your supplies expenses here. And what will happen is you will get this beautiful pro forma that looks something like this. Okay? And so what this will break down for you, these metrics at the top, this is basically your practice on paper. All right? You're completing 50 visits a week. 217 visits a month at $90 a visit. Here's your collections per week, your collections per month, and your collections per year on average, if you were to maintain this setup. Okay, you have 1 full-time front desk, 1 full-time PT. Let's say we had 2 PTs. Okay, 2 PTs. Now we're at 100 visits a week. Making $468,000 a year. Okay. 50 visits a week, 90% arrivals. We schedule 56. We have all of our expenses. And what it'll do here is break down your financial KPIs. Here's your payroll expenses below 60%, your supplies, your marketing, your operations, and your billing as a percentage of payroll, as a percentage of income, right? Go back to the last episode to look at normatives here. Look at your cost per visit, your profit margin. You're at 13.39% profit margin. Okay? Now, you've got 2 PTs and you've also got a tech here. You might decide, you know what? I can't afford the tech anymore. Now my margins go up to 19%. Right? Hey boss, can we hire a tech? I don't know. Maybe we shouldn't, right? Maybe we should hire 1 more PT first. Get them full. Then from there, we can bring in a tech. And you see here, now I'm at 26% profit margin. So if we don't have this tool, hey boss, I'm really busy. Can we hire a tech? We say yes. We put our practice at a financially compromised position. So that's the power of this. All right. So for more details on how to use this tool, we can click on this training video here and it can walk you through it step by step. But this is the power of the pro forma, right? And so here's the design. You know, we might say like, hey, I only want them to complete 45 visits a week. That's fine. Just know that your margins are going to suffer. You see, you're at 17% margins. All right. If I want to be above 20% margins, I'm going to have to figure out a way to get to 50. See how that changes? Just by raising it 5 visits a week, I go from a 17.8% margin to a 25.45% margin. That's the difference between $14,800 a month in profit and $9,300 a month in profit. It's an extra $5,000 a month. What could you do with that? Could you pay your people a little bit better? Could you add bonuses? Could you hire a tech? Of course you could, right? So you plug this in, and now we say, okay, we have to hit a 90% arrival rate. We have to hit a 50 visit per week minimum with our therapists. And we have to use the KPI dashboard here to drive metrics to that productivity standard. We have to keep our budgets, our financial budgets, payroll, supplies, marketing, operations, and billing within these norms, right? And our staffing ratios are here. And there's a pro forma. Pause. I'm going to record the closing. So guys, if you've watched this entire series and you still don't have a simple KPI dashboard and a basic pro forma built for your practice, that's going to be your very next move. It's perhaps the most critical thing that you can do in your practice. And you don't need to be a CPA. You don't need to be a bookkeeper to do this, but you need a very clean scoreboard and a forward-looking plan if you ever want the practice to run without you guessing all the time. And if you want to be able to make really good decisions. And if you want help with that, if you want help putting this into your team and making better staffing decisions, that's exactly the type of work that I do with practice owners. You can start by booking a free 20-minute staffing freedom call. And on that call, we'll look at which numbers you're already tracking and which ones you might be missing. We'll sketch out a simple KPI dashboard and a pro forma for your clinic, and we'll map out who on your team or which healthcare trained virtual assistant should own updating and reporting those numbers so that you're not the only one staring and carrying the weight of that spreadsheet. All right. And so if any of that sounds helpful at all, click the link in the description, book your staffing freedom call. Don't forget to download the KPI dashboard and pro forma. It's yours. It's my gift to you. And I would love to help you fill that out. Okay. Don't just be a student of the metrics. Get the tools in place, get the right people owning them, and let your numbers start working for you instead of against you. We'll see you next week.